Hi everyone, this is Jason Barrack of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a first-time guest. I've been following his work for a number of years. I originally found him, I think it was 2009, caught him on a number of episodes of Max Kaiser's Kaiser Report. He was saying some stuff that I hadn't ever heard on CNBC or Bloomberg. It was really waking me up. I was just starting to wake up then. I was a stockbroker at that time. And I really enjoy his work the more I get to learn about it, and he has a great YouTube channel, an absolutely great resource out there for our listeners with a lot of great free information. He is the Managing Director and Chief Investment Strategist of Smart Knowledge U. J.S. Kim, thank you for joining me from Singapore.
Sure. It's a pleasure to be here, Jason.
Now, J.S., you released your book in 2010. It was called The Golden Gift. Chapter 1 is a profound statement. It's unsound money is the root of all economic discontent in the world. I agree with it, but why don't the majority of people in power agree with it?
Well, because the system they put in place benefits them. So, of course, I think all governments, the equilibrium of all governments is to maintain the status quo, right? So it's to maintain the status, and they don't want change. And the people in power are the people that put the monetary system in place today. I mean, the real people in power, because I don't even believe it's the presidents or the prime ministers or the congressmen or the parliament members of nations that have the ultimate power. You know, it's like Mayor Rothschild said, I'm paraphrasing, but he said he who controls the nation's monetary supply controls all the laws anyway, so it doesn't matter, because they ultimately control all the power in the nation.
Yeah, there's been an enormous fight, an information war, if you will, on CNBC, on Bloomberg, to try to control the majority of people's thoughts. I know a lot of smart people. You went to an Ivy League school, at least for your undergrad. I think graduate school. You went to University of Texas, according to your bio. And I've met and spoken with a lot of smart business people. I live right outside of Washington, D.C. There's people here with 2, 3, some even 4 degrees. You know, these are not dumb people. They're very book smart. A lot of them went to Ivy League schools, and yet they don't see the world at all the way you and I do. When I bring up, reading Ludwig von Mises or Murray Rothbard or Friedrich von Hayek or any Austrian school of economics, they've either never heard of them, or they say, they're associated with Ayn Rand. Why do you think that is, where this ideology from certain people who went to the top business schools and the top academic schools, either in economics degrees or whatever, why are their minds made up about certain things?
I think because the people in power, and it goes back to I guess, the Industrial Revolution in America, when the education system really was shaped. And, pre-Industrial Revolution, it really wasn't a stigma not to graduate from high school or university. It only occurred when the Industrial Revolution happened that the industrialists needed a bunch of workers, that the American education system really became formed. And if you look at who funded it, it was the Rockefellers and the Carnegies, right? And so they actually put more money into shaping the American education system, which then was spread to the rest of the world, a lot through University of Chicago, that then was spread to Latin America and the top economic schools in Latin America. So, of course, they wanted Keynesian economics to be the curricula that was taught in economics and not Austrian economics, because that was the model that served their needs the best.
Yeah, I completely agree. And the Keynesian economics, it should have been discredited in the 1970s. I mean, stagflation, the Keynesians said it wasn't possible. We could not have high inflation and high employment together. They said, we had to have wage growth in order to have inflation. And yet in the 1970s, there was stagflation, massive amounts of misallocation of capital then. The scales of misallocation of capital you were telling me before about all the asset bubbles all over the world that you see, I can make an argument that the amount of misallocation of capitals is in the many, many trillions. And yet the Keynesians, it's like they're bulletproof almost. Most of the people in the mainstream, even though they may disagree with the Fed, they still want to stick with the Keynesian economics. They're just like, let's replace the Fed chairman, or, we can do a couple tweaks here or pull this lever there, and we'll fix everything and we'll get back on track for growth. It's just ridiculous.
Yeah, I think part of that reason, too, why you have so many people going along with it that might not even necessarily agree because, like you said, we have enough history to show us that Keynesian economics doesn't work, even with QE, right? Because they always say you can print your way out of recessions. And obviously, the MSM narratives that are being sold are of recovering economies, but anyone that really looks at the facts knows that's not true, right? So there's massive failure of Keynesian economics today all over the world. But I think a lot of people stick to it is for career choices because the central bankers have a lot of, they unwield extreme power over people's careers, and anyone that criticizes, say, the Fed Reserve policies, their careers don't get advanced, and they've learned that. And I'm sure that happens in Europe at the ECB, anyone that criticizes as well. If they're economists or in the financial world, their careers will get crushed. So they understand that. So they might not even necessarily believe it, but for the sake of their careers, they will support it publicly.
That's exactly right. And I think the documentary Inside Job, I don't know if you saw it, they revealed that the Federal Reserve was paying, hundreds of thousands of dollars in grants to each university to write research reports on this. So they would name the conclusion that they want, and then the academic, the PhD economist would have to go and write that. So you're risking career suicide then if you're an academic and you needed the grant money, and almost all the grant money in the economics academia comes from the Federal Reserve if you are upsetting them. So I think the system's just been subverted. It's been, I guess this was a long-term plan, I guess you could say, starting with maybe the progressive era by the bankers, by politicians, to say, we need a central bank. We need the ability to print money at will so we can have a welfare warfare state, and we don't have to keep raising the people's taxes, right? Because if they raise the people's taxes directly instead of the inflation tax, the people would probably start to revolt even more than they are right now.
Yeah, I absolutely agree. And I think a lot of problem too, I think, today is that language has been subverted. So there's a whole language of lies that's been created where, up is down, left is right. Economic recession and depression is economic recovery, and people buy into these lies because it's essentially the MSM, the mainstream media, that is propagating these lies.
Yeah, I completely agree. The mainstream media spins everything in a ridiculous amount. And that brings me to Chapter 2 of your book. You want to, it's called Ideological Subversion, Transform Lies into Publicly Accepted Truth. I don't know about you, JS. You don't live in the United States anymore, but whether I'm dealing with smart people who have a lot of book degrees or people who have a lot of common sense on the streets who might not have went to a lot of years of college, a lot of those people all kind of fall into the same category where they might know something's wrong, but they don't understand what's wrong. And there's also a lot of people here in the United States. I call them sheeple. I'm not sure. I call them sheeple. They're the bread and circuses crowd. They care about their reality TV, their sports and stuff. Do you think that's by design then, based on what you're saying in Chapter 2?
Sure, I think that's totally by design. I think there's a lot more distractions today as well through, TV shows, because like when you and I were growing up, there's just basic TV, right? But now you have like HBO, Showtime, all these cable TV shows just pumping out like high quality TV shows that serve as more of a distraction. I think even with professional sports, that's kind of like the modern day gladiator games, because when the Roman Empire started falling, they tried to entertain people just with gladiator games, right? So it's to take people's minds off the reality of the poor economics and the suffering of their daily lives. And I think definitely that's going on today.
Now, also in Chapter 2, the central bankers' policy maneuvers, we have so much coverage of the Fed, but it seems like the Federal Reserve, they just keep changing the names of programs. Is that what you expect to go forward here, where they're going to keep moving the goalposts and changing the rules and creating a new list of alphabet soup programs to keep printing the money?
Yeah, although now they seem to be hiding it more, right? Because I don't know, there are articles on Zero Hedge in which Belgium was buying a tremendous amount of U.S. bonds, and they concluded that Belgium was just China, right? That China was buying bonds through Belgium. And so I think that, that the Fed has basically used almost their entire toolbox now. I mean, they can't cut interest rates any lower than they have been since 2008, right? So I think
Well,
that
well, I agree with you. They can't, but there's Keynesian academics writing white papers saying, let's tax 5%, bank account tax for people holding their cash. They're evil hoarders, right?
yeah.
Their savings, their cash, yeah, they're evil hoarders. Oh, let's do a bail-in. On all these guys.
Yeah, well, actually, I remember reading, and I believe this is true. Let me see if I can Google it real quickly just to confirm that J.P. Morgan was actually taxing some corporate accounts at 5.5%. I'm pretty sure I remember reading that. I'm pretty sure it was J.P. Morgan.
Well, there's more academics planning more of this. I know though there's a lot of white papers going around talking about taxing all bank accounts in certain countries. So these are all Keynesian economists in different countries who they're blind ideologues and they just want to they don't want anyone having savings. They think that the money should be redistributed and that these bureaucrats with PhDs, these central planners, can allocate capital and make the economy better, and we can get back to this unlimited growth paradigm that Keynesians seem to have and politicians like. Because hey, if we're in a recession or a depression, politicians can't normally stave off losing an election. Then they need the economy to look good so they can stay elected.
Sure. But what they're going to drive the whole world to if they continue under this current path, I believe, Jason, is that they're going to drive the world to become a world full of Zimbabwe's. I mean, because Zimbabwe is a perfect example of what will happen if we continue down this path.
Yeah, and Zimbabwe just switched to the dollar. Talk about from the frying pan into the fire. So they may have some temporary reprieve where the dollar is temporarily strong compared to the other fiat currencies, which are falling faster than the dollar, but the dollar is just temporarily strong, if it's strong at all. And Zimbabwe switching to the dollar isn't really going to save it for very long.
I agree. And the whole meme again that's in the mainstream media of the dollar being strong last year is a complete joke because if you look at strength, it's all relative, right? So what is it being measured against? It's being measured against other crappy fiat currencies like the yen and the euro or the pound, right? So they're the three major global currencies that the dollar is being measured against. So if all are weakening and the dollar is weakening at the slowest rate of currencies that are all weakening, that doesn't make it strong. That's like saying a 115-pound male weakling is super strong because he stands next to a 90-pound weakling and an 80-pound weakling, but put him up against a pro athlete that's 230 pounds of muscle, and all of a sudden, that strong 115-pound weakling is no longer strong. So put the dollar up against sound money like physical gold and physical silver, and it wouldn't be so strong anymore.
That's a great analogy. And yeah, I think one of the main reasons is we just have so many people with money. Most of the money managers, the guys on Wall Street, the hedge fund guys, the trend traders, they're also short-term oriented, JS. They don't want to think. I've tried to have Phyllis. These guys are not dumb. They're very book smart, a lot of them, although a lot of them haven't read Wall Street. They haven't read any Austrian School economics, and most of them aren't libertarian. But a lot of them are so myopic, they tend to not really care what happens a couple years from now, 3 years, 5 years, 10 years. They're just focused on, next week, next month, beating their benchmark so they can get their $1 million bonuses. And these guys have way too much power over the economy and controlling things and stuff like that. We see a white paper that Ray Dalio wrote. He wrote a beautiful deleveraging paper, which was asking for financial repression, and the Federal Reserve, a month later, basically copied it. And there's one of the richest hedge fund managers in the world, multi-billionaire, and the central bankers basically just did what he asked them to do.
Sure. And I think I agree that all these hedge fund managers, all these advisors, all these huge commercial banks and brokerage firms are myopic in that sense, and even to a smaller degree than even just caring about their annual bonuses. I think it's on a quarterly basis. They're looking every quarter, and that's kind of their focus for each quarter.
Yeah, exactly. It's month. If it's a really competitive hedge fund, it's monthly or quarterly at an investment bank. Yep, I completely agree. My next question for you has to do with the gold standard. there's a lot of people out there, whether it's Paul Krugman, Norio Rubini, even some libertarians out there who don't think we should be back on a gold standard, thinks there's so many problems with it. Do you think we could go back on the gold standard fairly quickly without enormous amounts of pain?
I don't know if there wouldn't be enormous amounts of pain. I guess it all depends on how you go back to it. Because I think if you go back to a gold standard, obviously you got to purge the whole system of all this bad money that's out there. So you can't go back to the gold standard with these trillions of dollars out there. And you got to go back to a true gold standard, I believe, because I think Bretton Woods was really more of a U.S. dollar standard than anything. Because under a true gold standard, I think, you should have gold as a standard in every country. But that wasn't the case under Bretton Woods. It's only that gold was fixed to the dollar, and then every other currency in the world was fixed to the dollar. They weren't fixed to gold directly, but every other currency was fixed to dollar. And then I believe there was a 2 or 3% margin that those currencies could vary from the fixed rate to the dollar, and the dollar had to do nothing, but every single nation had to take monetary policies to make sure that the exchange rates of their currencies to the dollar wouldn't oscillate any more than that plus or minus 2% that was allowed. So I think if you look at a true gold standard, you have to purge the whole system. There have to be a lot of debt forgiveness. So actually we could go back to gold standard without a lot of pain. There'd be a lot of pain to the bankers, but not to the people, because the bankers created a debt society, right? So there have to be a lot of debt forgiveness to go back to a gold standard. But I think the thing that a lot of people, especially when they look at the price of physical gold and physical silver now, I think the mistake people make is that they look at it in terms of dollar price or yen price or euro price, but these are all fake counterfeit currencies. So they should be thinking, like under a true gold standard, if you look back to, say, like the Roman Empire when they're gold and silver coins, right, and that was what was being used, is that the gold standard was defined by a certain weight, right, of gold, right, and the same thing, a silver coin was a certain weight, or you could say purity. So if that purity, like obviously Roman emperors with silver coins started to debase the purity of that coin, so then you would have to use more coins to buy the same good, because if the purity was being debased, that means the true silver weight of that coin was being debased. But if you actually had more weight of silver in the form of coins, or more weight in gold and ounces of gold, then you could actually buy more goods. So people need to really think about how many ounces of gold and silver they have than to be so fixated with the dollar price, the yen price, the euro price.
Yeah, it's more about purchasing power and how many ounces you own than the paper price of the metal. Although a lot of people chase the paper price higher, unfortunately, in 2010 and 2011. They bought at the top, and they didn't have the plan that, I'm going to dollar cost average, I'm going to buy when it's low. They didn't have that. They just saw it going up and up. It had gone up, for, I believe, like almost 12 straight years in a secular bull market. And then they chased it higher, and then there was the unexpected correction, or at least most people didn't see that correction. But I think one point about the gold standard that I've read that I haven't heard everywhere, I think the gold standard's unfairly blamed for a lot of economic problems, whether it's academic economists or politicians. I think there's a lot of evidence out there, JS, that almost all the gold standards that have been implemented in the modern era, like you said, whether it's Bretton Woods or the gold exchange standard prior to that, which was right after World War I, it wasn't a pure gold standard. There was cheating, a lot of cheating in the case of the gold exchange standard. Even Winston Churchill talked about it. Reserves didn't have to be gold. They were also dollars and British pounds, and people were drastically printing extra money and cheating. There's ways in certain gold standards in the more modern era for people to drastically overstate their gold reserves. So there's always, I guess, going to be attempts by either bankers or governments to try to go around the rules in almost any system.
Yeah, I absolutely agree with you, because when I look at the gold standard too, because people say, oh, look, the gold standard doesn't work because look at all these economic panics that happened under the gold standard. It wasn't that the gold standard didn't work. It was the bankers' failure to uphold the gold standard that caused different economic panics or that led, say, to the Great Depression, because, like you said, they went off the gold standard and they weren't upholding that ratio, and they were printing more dollars and not backing it with physical gold. So every time I looked at the reasons why certain economic panics happened under gold standards, because of the bankers' failure to uphold the gold standard. So it's very disingenuous of economists like Paul Krugman or other the economists out on the forefront there to blame the gold standard and say, look, the economy was no better under a gold standard than it is under this fiat fractional reserve banking system we have today. So why would we want to return to it? That is absolutely an utter lie. If you really understand what a gold standard is and what conditions need to be upheld for a gold standard to exist, and you see consistently bankers went off those conditions when they told the rest of the world they were on the gold standard. Even when Roosevelt declared the end of the gold standard, when I looked into when bankers truly went off the gold standard, it was decades before officially and what's in the all the textbooks as the official date the gold standard ended.
That's very interesting. Now, do you think China wants the gold standard now? Why is China accumulating so much physical gold?
Well, China has a rich history of precious. In fact, all of Asia does, right? Because I see once I moved to Asia, there's a huge dichotomy in understanding of precious metals and sound money from Asia and then in Americas, right? Because everyone here believes in gold. And not everyone believes in silver, but a lot of people believe in silver as well. So I believe the reason China is accumulating a lot of gold is because they understand, they're very aware of the fact that central bankers have been heavily involved in suppressing the price of gold for the last 4 years. They understand that the price of gold has nothing to do with the determinants of the physical supply and physical demand of gold, which sounds ludicrous on the surface, but it's true. I mean, basically the price of gold is set in the futures markets in London and New York, which have absolutely nothing to do with the determinants of the physical markets. So it just has to do with the paper markets, which don't represent the physical market. So China understands that. And so I believe that I'm not quite certain. I don't actually think they will return the world to a gold standard, but they understand the importance of gold. So they basically want gold as part of the reserves to back their economy. Because especially if they just want to inclusion in the SDR, right? The SDR is no better than any other fiat currency we have. It's just a basket of fiat currencies that they'll be included in.
Yeah, I think China is just buying the physical metal for insurance and wealth preservation and diversification purposes because they had so much paper from working hard and manufacturing and supplying the world with so many goods that they had to diversify it, and they accumulated trillions worth of paper reserves, and they didn't have nearly enough gold. Now, obviously, I think they have a lot more gold than they technically report. I think they have at least, most experts think that they have, most mainstream experts who like gold think that they have, 3, 4, or 5,000 tons maybe. But I've interviewed Jim Willey and Alistair McLeod who think that the Chinese government, the People's Bank of China, have over 20,000 tons of gold. How much gold do you think China may have approximately now at this point?
I don't know. That's all speculation, Jason. No one really knows except the Chinese, right? So we can say I've heard people say they have 50,000 tons, right? So
yeah, I mean, how can you prove it?
well, we know that they probably have. I would say they probably have at least 10,000, but 20,000, I don't know. The way that you can get to those figures of probably at least 10,000 is you can see the figures that they're importing through Hong Kong, right? And I believe last year that was at least 2,000, right? So that's already more than, you add that, then that's 3,000, right? To their 1,057, I believe is what they say they have now. But when they increased it from like 600 tons to 1,057 back in, when was that? 2011, I believe. Does that sound right?
2009, I think.
Okay.
They were supposed to announce
Okay.
They were supposed to announce their 5-year update. I think like either last year. So I think they may have delayed it a little bit.
Okay, so even in 2009, right, when they updated, I didn't believe that either. I believe that was a severe underestimation of what they had. And I believe that they only updated it just to test the waters to see if that would indeed influence the gold market, with people knowing that they have a lot more gold than they were saying. And then I believe it was in May, right? There's all these articles coming out saying, oh, China's going to update their gold number. And I thought even if they did, it'd be irrelevant because, again, I don't really think they were ready to come out and be truthful. So, again, even if they did update it last May, I believe that would have been a severe underestimation or underreporting of their true gold reserves anyways.
Yeah, I completely agree. I didn't think they were going to give an honest number, so I thought maybe they'd announce, 3,000 or 5,000 tons. I interviewed experts giving different numbers who expected them to announce sometime this year an update where it wouldn't be the real number, but maybe it's to Germany's amount to say, China is the second or third largest economy in the world in terms of GDP, and we now have more gold than Germany. And it's just an arbitrary number. It's not the real number, but it is what it is. In terms of continuing to accumulate physical gold, though, it just makes sense because it's below the all-in production cost of the miners. So if you can buy gold that cheap, if you can buy it below cost, it makes enormous sense from an investment perspective to just keep stockpiling it.
Sure, and silver, of course, you make the same argument that silver's, and in fact, you can argue quite credibly that silver's even more undervalued than gold at this point. So, that brings me actually to the next point I want to make about as far as, China accumulating a massive amount of gold reserves. I think Russia, too, has a tremendous amount of gold reserves, and I don't think they're reporting accurate numbers either. I think they're far underreporting their true accumulation of gold. But I think that brings me up to the next point, I think, because a lot of people that believe in gold and silver, like you and I've heard a lot of people within the gold and silver and precious metals community put too much stock into what China and Russia are doing. I think that's dangerous. By that I mean that they're waiting until China and Russia, update the reserves so it could spur another run in gold and silver prices higher. And I think it's very dangerous to rely on nations to kind of free the gold and silver price or to give us the freedom we're looking for. Just like, when Barack Obama first got elected, a lot of people looked at him as a messiah, right? He was going to save America, and obviously that didn't happen.
Open change, yeah.
So I think it's very dangerous because I believe that people have to start believing in themselves. We're 7 billion, and there's only a few thousand rotten apples in this world that are really controlling the monetary system. And I think that we have to realize that 7 billion of us can overcome and defeat a few thousand rotten apples, and we have to start believing we have the power to do that. And I believe that we could actually force the bankers to go back to the gold standard if we want it, but we don't believe we have that power, so we don't do it.
Yeah, I completely agree. To rely on government to solve all your problems is not a good idea. You need to learn how to solve your problems yourself, improve skills, grow your income, learn how to invest and things like that. You actually have a chapter in your book called "The Solution Must Come from the People." I completely agree. It's got to start at the bottom and work its way up.
Yeah, because I think we could just re-engineer what the bankers did when they took us off the gold standard. Because all they did when they took us off the gold standard said that, the dollar's no longer redeemable in gold and other currencies are no longer redeemable in gold. And today, well, it is still redeemable. Every fiat currency is redeemable in gold because it's not illegal to take your money and to buy gold, right? So in essence, you can still...
It's not illegal yet.
Yeah. But in essence, we all could basically redeem our fiat currency in gold. And sure, countries have tried to stop, like India, right? India ridiculously raised their import tax on gold from 1% to 10%. So that's raising it by 900%. And I believe it was 18 months. I think it actually was just a little over a year. It was less than 18 months in which they did that. Obviously, that's to stop Indians from redeeming rupees in gold. But, so those are some of the things that are being done by central bankers to try to stop people from redeeming their money in gold. But people need to start asking themselves, why do the bankers want to stop us from redeeming our fiat currency in gold? But the reason I say we have the power to certainly return the world back to a gold standard is to force the bankers back into a gold standard. Because if you simply look at the gold production numbers, if they're accurate, and I think that's one number I think that I believe is fairly accurate, that gold production has been in and around 2,500 tons. In the early 2000s, they say it was like 2,000, what's the figure, 860 metric tons in 2014. So a metric ton is 32,150 troy ounces. That's really not a lot of troy ounces. So, people say that gold production is peaking, right? We're reaching peak gold. So if you just look at it returning back down to around 2,500 metric tons, that's the same as about 80.4 million troy ounces. So if you look in the U.S., there's about 24.5 million people 15 years of age or older. So if everyone in this demographic just bought one single 1 ounce gold coin, that's not even $1,200, we would consume 30% of the world's annual gold production. You look in China, the number of people 15 years of age and older are 964,906,000 people. So if just every single Chinese person in this demographic bought one gold coin at less than $1,200 an ounce, they would consume the next 12 years of gold production. And that's certainly what that would do. It would force gold prices sky high. Because if you're buying all the gold production in the world, and then people say, I have always said historically gold serves as a weather vane for what's really going on in the monetary system. Everyone would then come to realize, hey, all these currencies, these fiat currencies bankers are trying to impose upon us to use and give us no choice for competitive currencies, they're fake currencies. People will realize it. And then either the bankers would have to give us the gold standard as the monetary system, or just everyone would opt out of their fiat currency system. So I truly believe, and it wouldn't even take a mass awakening, because like those demographics I just passed to you, would eat up all the annual gold world production every year. Or, at least in the U.S., consume a massive amount, which would be enough to force gold prices much, much higher.
Yeah, and also the production costs for the mines. I don't know if you follow Steve St. Angelo's work at SRS Rocco Report, but he covers the production costs of the miners. I mean, the miners have to go through way more uneconomic tons of rock just to pull out an ounce of gold. It's gotten a lot harder over the years, especially the last 8 to 10 years in terms of cost going up just to pull out that next ounce of silver, that next ounce of gold every few years. The costs just keep going up and up, although the last couple of years the costs have gone down, but eventually I think we're going to start heading back up.
Sure. Yeah, the costs have gone down somewhat due to the collapsing petrol prices, right, and energy prices. But, a lot of the high-grade reserves, which are obviously cheaper to produce, the high-grade reserves are diminishing. What's left is a majority of low-grade reserves, which are much more expensive to mine. And then some of the high-grade reserves, like in Argentina, that Barrick Mining, I believe, owned, because there's a lot of environmental issues, that mine looks like it's never going to be produced. So, I believe that I do believe a lot of the literature out there that we are coming up to peak gold, and that gold production is going to start declining. And like you said, because it's primarily low-grade reserves and a lot of the high-grade reserves have been mined, the costs are going to go up because the cost to mine low-grade reserves are much higher than high-grade reserves.
Yeah, that mine in Argentina, it's up in the Andes Mountain, Argentina-Chile border. It's a Pascua-Lama mine. I think initially that mine was only supposed to cost around $1 billion, and it was supposed to be in production already. And 4 or 5 years later, it's nowhere near production, and they've already sunk $6 billion into it.
Yeah.
So.
And I don't have much faith that mine is going to go into production. I really don't think it's going to go.
Well, not unless the Chinese government buy. The rumor going around, JS, I've heard, is that the Chinese are going to back one of their larger gold miners to buy 50% of the mine, and they're going to subsidize it to go into production. That's what I've heard. I don't know how long it'll take, though, to do that, but I heard Barrick doesn't want to sell, but the Chinese are the only ones willing to buy because the costs keep going. We're already at $6 billion sunk in, and it's going to be more than that, a lot more.
Yeah.
Well, my last question for you before I let you go is there's a lot of debate in the community here outside of the mainstream media over how much longer these central bankers, these politicians can keep the game going. They've done a very good job, I have to give them credit, of kicking the can down the road. They've kept things going a lot longer than I thought personally, and a lot of other very smart people who I've interviewed or spoken to or learned from have said that they can keep things going. Do you personally expect them to be able to keep kind of the status quo going without radical change for another couple years or maybe 5 years or something? Or do you think we're coming to a much more violent and larger tipping point soon?
Although I will admit that they've extended it, the whole pretend and extend modus operandi that they have successfully executed it even longer than I thought they could. I really can't see it lasting 5 more years. I would say tops that things are going to really fall apart by 2017, and I wouldn't be surprised to start seeing things fall apart as early as the fourth quarter of this year. And the reason being is if you just look at what's going on right now, right? Like a lot of banks in the EU are now giving negative interest rates, right, for just the whole deposit accounts. Was it Switzerland has negative interest rates on 10-year Treasury bonds? I think it was Switzerland, right?
Not sure offhand.
Yeah, because I hate saying stuff off the top of my head and not knowing. I'm going to try to Google that real quickly. 10-year bonds, negative interest rates. But I know there is a country.
Is it Germany? I know Germany, I think, was discussing it. They may be negative in Germany.
It is Switzerland. I just found it.
Oh, okay.
Switzerland says 10-year bonds at a negative yield. So think about that, right? The government's trying to say, buy this bond, and after 10 years, you need to hold on for 10-year maturity, and we're going to guarantee you a loss. I mean, if you look at that, right, that is just absurd. So, and the fact
it's dystopian, yeah.
and the fact that bankers are giving negative interest rates all across the EU for deposit accounts is a sign to me that things are falling apart structurally right now. So I find it really difficult to believe they're going to be able to hang on for 5 more years because, yeah, I think that people aren't giving the importance or attaching the importance to this drive to all digital, to bank cash, negative deposit, like negative money market accounts, negative 10-year bonds. The fact that there was a hedge fund manager in Switzerland that had a lot of cash parked at a Swiss bank. And he said, hey, I discovered that's going to be a lot cheaper for me to privately vault this cash rather than to be forced into negative interest rates and hold in this bank. And I want to withdraw it. And then the Swiss bank says no. I mean, that should be a clear sign that all the money in use in the system is counterfeit.
Yeah, it's a war. War on cash, right?
Yeah,
that's a new war.
Because they said you can't get your cash back, but you can digitally transfer it anywhere you want. So when cash is no longer money, then people should be. I say should be because they're not. They should be questioning why is cash no longer money.
Yeah, there's so many dystopian things going on, JS, whether it's the war on cash or financial repression with interest rates, not allowing the market to set the interest rates to determine risk. There's so many asset bubbles. There are so many backdoor deals. There's so many politicians that should be in prison, whether it's Hillary Clinton or so many others. That John Corzine who stole, from MF Global. There's just so many. It's such dystopian right now. I don't know how much longer it can continue, but it's continued longer than I thought when I originally started waking up in 2008, 2009. If you would have told me back then that we'd still be going in 2015, that things haven't collapsed, I would have been totally shocked.
Yeah, and I think the answer to your question is how long it will continue. It will continue until there's violent revolution. Because as long as people don't react, I'm not advocating violent revolution, so I just want to make that crystal clear. I believe peaceful revolution, obviously, is a sustainable solution, whereas violent solution is not sustainable. And the peaceful revolution could be the people taking charge, taking personal responsibility, and forcing the banking system back on the gold standard. But the reason I say I think the bankers will keep doing this until there's violent revolution is because if you look at what happened in Cyprus, right, with the bankers basically just putting Cyprus on a bank holiday and then stealing, there's no other way to put it. They stole 47.5%. That is insanity of every account more than 100,000 euros. And you think, why would they do that? And why did no one react to that? And as long as people remain passive and submissive to acts like that, I think, people are going to be shocked when it happens, but I think in the future there's going to be more instances of that direct theft from people's bank accounts. I really do believe that that's going to happen because that's the methodology of bail-ins are going to happen. And I don't think this is just speculation because a lot of people are really ignorant of a lot of the legislation that was passed after the 2008 crisis when, when Merrill Lynch, Lehman Brothers, Bear Stearns all went down. There was a lot of legislation passed in the EU and in America that specifies that these bail-ins can happen legally where monies can be taken directly and stolen from people's bank accounts. And people need to be aware.
Bail-ins, bailouts, war on cash, financial repression. These are all glaring signs of a police state, totalitarian regime, where the government just has too much control on our lives. They're spying on all of our data. Edward Snowden and others have revealed that. It's just way too much. They want to control everything we spend our money on, if we have money at all. And if we complain, they could, on a digital currency system, if there is no cash, they could almost do what they did to Julian Assange or Edward Snowden, and with a couple clicks of the mouse, they can make it so we almost can't buy groceries then.
Yeah, I agree. And even in the one interesting, curious fact is I spent some time in China, and before I've actually spent time in China, I was not aware that the largest denominated notes they have is 100 yuan. And 100 yuan is basically the equivalent of about 14, 15 US dollars. So when I went there, it's not like there's not money because there's a lot of money in China. And there's a lot of billionaires in China. Because if you look at, say, the top 10 lawmakers in China, they have a net worth of, I believe, 184 billion US dollars. We're not talking 184 billion yuan. 184 billion dollars is their equivalent worth. And so, I thought there's only one of two reasons that the note the highest denominated note is only 100 yuan, which is equivalent about $15. Is one, it's one way of the Chinese government forcing people out of cash, right? Because you make any large purchase, who wants to carry around, 30, 50, 100 notes? No one. You just use your credit card, so that way the government can track everything because everything is basically a way of forcing the system to be digital.
This just adds. This is another type of dystopian measure. They're trying to track every transaction. I actually just started. I don't know if you know Eric Dubin from News Doctors and Silver Doctors, but I just started a new podcast show on our Wall Street from Main Street YouTube channel. It's called Welcome to Dystopia. So we talk about whether it's market news or politicians, scumbags of the week award, where politicians, got caught doing corruption, or crazy news stories where the government's using technology like this. We just like bringing this up and discussing it. So it's another type of example of, welcome to dystopia.
Yeah, exactly. So I do hope, because I think that I do believe we're going to see part two of the financial crisis that started in 2008, because all that's happened in the 7 years since has been extended and pretend, and the bankers have not tried to apply any solutions whatsoever to fix the problems. And in fact, they just magnified the same things they were doing that caused 2008. So unfortunately, I believe that the financial earthquakes are coming. They're going to be worse. They're going to be worse than what happened in 2008. And I only hope it doesn't bankrupt people to the point where, we will have true serfdom. I hope people like you and I, we can wake up enough people in this world that they start acting before it becomes too late.
Well said. And you actually called the financial crisis of 2008. I believe you said you called it in 2007. You were doing videos and writing newsletters about the banking system and the housing market and things like that. So you saw this coming in advance.
Yeah, and in fact, it's funny too, because even then, no one believed me, because I at that time I was still writing on Seeking Alpha. I don't know if you're familiar with that website, but
oh yes, yes, a lot of Wall Street guys, yeah, regular Wall Street guys mostly, yeah.
Yeah, so I stopped writing for them like years ago because it became way too mainstream for them. So for me, I mean, but I wrote an article in 2008. I think it was just 18 trading days before the collapse. And I raised the question, will the U.S. stock market collapse now or in the imminent future? And I would say it was 10-1 the negative reaction I got to that article. And people called me loony and crazy. And they said, I didn't understand the economy at all, and the stock market, U.S. stock market, was undervalued in their estimation. So, I mean, you could tell people the truth all you want, but if they don't really understand truly how the system works, then they're never going to understand what you and I are saying, unfortunately.
Yeah, it's like the boy who cried wolf or Chicken Little. I mean, I guess you could pick your analogy. You have a great phrase I heard you mention that, people don't see the truth when their salary depends on them not knowing the truth. So I think that's pretty apropos here. Just want to thank you again for your time, JS. I enjoyed this discussion, and hopefully we can have you on again soon to talk about the economy and Asian gold demand and the gold standard and things like that. Please tell our listeners more about Smart Knowledge U and what you guys do over there.
Sure. Okay. Well, we are fiercely independent consulting, research, and education-based company based in Singapore. And our website is smartknowledgeu.com. And in fact, at the end of this month, I'm actually hoping to launch a new service called Smart Wealth Academy. And what that is, it's basically just an online education program that speaks about a lot of what we discussed in this podcast, just to enlighten and illuminate people as to what the truth is about the economic system, what the truth is about the banking system, what the truth is about the monetary system. And the interesting thing that I also discuss in this program is the psychology of it all, because I've always been a huge proponent of believing that we have to understand psychology, because I believe there's a lot of psychological warfare out there, and that's the reason why people really can't grasp the truth, even when the truth is staring them in the face. So you have to understand concepts like confirmation bias, cognitive dissonance, to really be able to hear the truth and then accept it if you've been someone that has believed the lies that have been propagated through the Harvards, the Oxfords, the Wharton schools, and you come out there and think you know the truth because you paid $50,000 a year in tuition, which doesn't really equate to actually understanding the truth.
Yeah, but it'll give you that high-paid government job here in D.C., and it'll allow you access to a lot of government funds, and it'll give you really good country club membership, and it'll allow you to rise up the ranks of the status quo. So the status quo is the problem. I completely agree with you, and you're doing a really great job to wake people up, and just keep up the good work. I enjoy watching the videos on your channel and also your podcast. So you're getting through to people out there, and thank you very much for your time.
Yeah, and also thank you as well for all the work you do, because I'm definitely not a cynic in the fact that I think we can wake up enough people to actually change a system. And that still remains actually the mission of my company, smartknowledgeu.com, is to return the world to sound money. And I think if we do, we can have an infinitely better future. So hopefully, we can wake up enough people to actually make that come into fruition.
Yep, sound money, I think, would solve most of the problems. I mean, society right now, there's enormous amounts of moral. I can't speak for you in Asia. I haven't been to Asia, but I can speak for the United States, and especially right outside of D.C. There's just an enormous amount of moral decay here in so many different ways, and I think sound money would be one of the most solid pillars or foundations to restoring the moral society in the United States.
Yeah, and the very last comment I want to make, which is maybe one of the most important comments of this podcast, is that to my listeners, to your listeners, that when people hear us discussing topics and they're skeptical, I never say believe me just because I say it, but I do urge everyone to perform their own research, because a lot of times people hold these views without ever having done any research about things that they might not understand, that topics that you and I discuss about sound money, about how economies flourished under a gold standard, but they discredit and marginalize them off the bat because they say, oh, that's not what I learned in my private school that I paid a lot of money for. But I urge people not to have that gut reaction and just to do your research, because if you do your research, you will come to understand that perhaps a lot of the things you believe to be true just aren't true. So take that extra step. I urge everyone to do that.
I 100% agree with that. And good research doesn't mean reading a couple years old issues of the Wall Street Journal and Krugman's essays, or the Financial Times, or the New York Times money section. That means, actually going out there and reading the comments of Paul Volcker and and Alan Greenspan before he became the Federal Reserve Chairman. We were talking about this earlier, his 1966 essay, when I thought he was really honest before he started selling out. So I think reading and understanding how the system really works is very important to everyone's financial future, and I think that'll solve a lot of problems in the world.
Yeah, and even go back 100 years ago. 100 years ago, I know it sounds like a long time, but really it's not really that long. And if you go back to the 1900s, you're going to find the literature about banking was completely polar opposite to the literature today. So you have to, I believe that will awaken and open a lot of eyes, because if you see, hey, why was this being said 100 years ago and this was the standard beliefs? It's just like how people say, you look at the political cartoons about banking 100 years ago, and people say, oh, they're so prescient because they basically foretold everything that happened today. I don't believe that at all. I believe it's just that everyone understood banking 100 years ago, and the possible negative place that banking could take us to under a fractional reserve banking system. And whereas I would say 90% understood the truth back then and 10% perhaps didn't, today is maybe 1 to 3% understand the truth today, and then 97 to 99% don't. So it totally got flipped on its head as far as the understanding of truth. So just go back 100 years ago and see what people believed, and then begin to question, why was this the widely accepted common belief back then, and why does no one believe it now?
Well said. Yeah, there's been a lot of programming in government schools and economics professors and textbooks and things like that. People don't question their professor, and they don't think independently anymore. And congratulations on your channel. You're doing a good job getting people to think independently. I want to thank you again for your time, and hopefully we'll have you back on again soon.
Okay. Be glad to come back on.